Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's on Wednesday, September 16th. Hey, we got a few economic news releases to go over today, so we're going to jump right into it. Now, we have the Consumer Price Index. This is one of the consumer inflation numbers. The headline one, we had a 0.1% back in July, and then the forecast for August was in zero, and it came in under. So we actually contracted, according to the headline number, at negative 0.1%. Now, if you strip out the volatility of the food and energy, we get the core, and this is really kind of what we look at because the volatility of between food and energy, especially lately with the oil prices going up and fluctuating so much back and forth. So basically, as you can see, we went across the board. We're up 0.1% back in July. We went up another 1% in August. So decent news right there is what we like, but still, when you look at the core, it's still relatively low from where we need to be. We'd like to be closer to 2%. Now, this isn't the Fed. We do look at this. It's a very important gauge, but the most important one is the PCE, the Personal Consumers Expenditures, Consumption Expenditures, which is what the Fed looks at. Now, that's the one, the gauge that the Fed will look at, determining rate hikes and such. Now, we also got the Home Builders Index for the month of September, and this is the confidence level of where home builders are feeling, where if they should continue building more homes or not. As you can see, with the 61% on the confidence level, it was supposed to be about the same. It had a slight increase, so decent numbers right now. Now, the market's up. Now, the whole consumption of good news is bad news because good news means that the likelihood of the Fed raising rates was there, but now that the Fed is on pace to looking like do that, they're going to switch back to good news is good news, bad news is bad news, and that's going to be the feeling. Now, we got today is the beginning of the two-day FOMC, and this would be important because they're going to look for any whispers of a rate hike tomorrow, any announcement for the rate hike tomorrow. Now, expect a lot of volatility over today and tomorrow in the market, especially tomorrow as they await, because there's so much uncertainty that Wall Street is basically they're flipping coins basically to determine, okay, if the Fed's going to raise rates or not raise rates, because the economy looks like it's kind of a stronger hold right now. Job numbers are okay, even though it's probably a little misleading in the sense that there's still a lot of people out there that are working part-time would like to work full-time, but we are seeing some improvement, better where we were 5 years ago or so. So that's good news. But on the other hand, we're looking at inflation, and inflation's still very low. We got the core PCE when it came in at year over year, we're at 1.3, and it dropped to 1.2. We need to be closer to 2%. Now, raising rates will happen is if they'll strengthen the dollar, and that will actually push inflation even further. The reason why the Fed raised rates is to keep inflation from growing too rapidly, and we have the opposite problem right now. So my feeling is that probably the Fed will hold off on raising rates and see what happens, and maybe wait until later in the year on this. And they're getting urged by a lot of people on a global scale, from the IMF to the World Bank, and a lot of global leaders are trying to urge them to withhold from raising rates right now. Here's a look at the bond market. As you see, we tanked yesterday. Huge red dropped. It was about 50 basis points yesterday, which means basically half a point. That whatever cost, let's say 4% was at par, now that costs you half a point just to get that same rate. So this can translate to roughly about 0.25% in the interest rate difference. Now we're up about 6 basis points, but it doesn't translate to enough of a improvement in the interest rate. So if we can continue this way, we might be able to get some improvement. But right now, as you can see, we dropped quite a bit on there. Okay, folks, you guys have a wonderful day. Pricing is about the same where we left off yesterday, even though we had that huge sell-off yesterday. But we're much lower than where we were starting yesterday off. Okay, I hope that's clear in looking at this chart here. Hope you guys have a great day. Thanks for watching. We'll see you tomorrow. And remember, tomorrow's going to be very volatile with the announcement of the Fed. Everybody waiting, and that will take place at 11:15 Pacific Standard Time. All right, take care. Bye bye.